Welcome back. I'm Pratap here. Today is 2nd January 2024. If this is your first visit to our YouTube channel, please understand we are providing a complete free training on supply demand zone price action. You can access the price action course videos from our YouTube channel. So please visit NeoStock YouTube channel and then click on this home page and scroll down to the playlist supply demand zone price action course. So click on this playlist. You will be able to access all the training videos starting from lesson 1.1 until the most recent lesson. Even all the upcoming lessons also will be placed under this playlist. So please make use of this opportunity to strengthen your trading skills. I am also providing the link to this playlist in this YouTube video description. So visit that description of this video and click on this link and you can visit this location. And I am also placing all these video links at our Telegram channel. So please also visit our Telegram channel. The link to NeoStock Telegram channel also is available in this YouTube video description. So please make use of this opportunity. Now let us get into our analysis part. So before generating today's demand and supply zones, let us evaluate the performance of high liquidity zones generated in our yesterday's report. So 6 high liquidity zones are generated in our yesterday's report. Let us go through these zones one by one. The first one is IDFC. This is a high liquidity demand zone, and this zone is already tested, and it is not a valid zone so far because previously prices have gone through almost until the distal line of this zone. After that, there is no fresh 75 minutes demand zone is created. So look into this. There is no fresh 75 minutes demand zone. So that is the reason why we haven't planned any trade in this IDFC. We cannot plan any trade. So the next one is Power Finance Corporation. This is a high liquidity supply zone. So today prices did not enter into this zone. So there is no trade triggered in this zone. Next one is Asian Paints. The trade is triggered but hit the stop loss. The same zone we also discussed in our yesterday analysis video. So this is the 5 minutes, fine-tuned 5 minutes area. So today it is violated, this zone is violated, hit the stop loss, and we got a loss around 760 rupees loss we got, and which is minus 0.63% return on the investment for one future slot, negative ROI, because we got a loss. And the next one is NTPC. So even NTPC also a trade is triggered, but it is a successful trade. And after that, the zone is violated. How we got the profit? So let us analyze this high liquidity. This is a 75 minutes high liquidity zone, high liquidity demand zone. We have a drop 3 base candles and again a lagging candle. This is a hidden body and a hidden zone concept, which I already explained to you earlier in our training videos. I think in one of the practical sessions, I think lesson 9.2 or 9.3, we discussed about these hidden zones. If anybody did not attend the hidden zone concept or hidden body concept, please go through those videos, you will understand. Okay, what we did, we fine-tuned this 75 minutes with fresh 15 minute zone. We identified a fresh 15 minute zone. We have a rally candle. We have a base candle. Again, we have a rally. Actually, this is not a drop candle. This is a rally candle. The moment you add the hidden body, you will understand. It's a ERC candle. And this 15 minutes time frame, again we fine tune to 5 minutes time frame. So here we have a rally candle, 4 base candles, and again a rally candle. So this is the 5 minutes where we need to take our trade. And today prices entered into this zone at 9:25 5 minutes candle and then reached the target at 9:45 5 minutes candle. In just 20 minutes the trade is completed. But here one important lesson you need to learn. Let's go to the target 15 minutes. Before planning the trade, your target would have been like this. Drop, base, drop. So let me change the color. Supply zone. It is supposed to be our target before planning the trade. But what happened after the market started? Already yesterday there is a drop, then we have a base. But today again, another drop candle is created. This is the leg out. This is the ERC candle is the leg out. So that way what happened? The revised target is changed now. The revised target is instead of the previously drawn, this is going to be the revised target. That is what? That is the reason why always I say market is dynamic. It is not static. When market conditions are changed, we should also change our targets accordingly. Previously we have seen several such kind of scenarios also. And today market reached at 9:45 candle. In 20 minutes we got a profit. So NTPC we got a profit to 7,200 rupees, which is a 4.4% return on the investment as per one future slot, because we always calculate return on the investment based on one future slot. Even though it is less than our average ROI, that is 6.1% during the intraday, but still 4.4% is a very good percent. So this is about NTPC. After that, this zone is violated. That means we got one successful trade. So the next one is UPL. Again, this is a 75-minute zone. This is also another successful trade. This is a 75-minute zone. We have a drop, 4 base candles, and then a rally candle. But this is a tricky trade. The reason is this is not a 15 minutes zone. This is a directly 5-minute zone under 75 minutes. That means it is an aggressive trade. When we should go for aggressive trade? Only when there are some price action clues. Let me go to the 5 minutes, then I will explain clearly. Let me go to 15 minutes. Yeah, now we have the clarity. We have a rally, 2 base candles. We have a drop, 2 base candles. And then we have drop, base, rally, again rally, base, rally. That way we got 2 opportunities here. And this is the 15 minutes area we fine tuned and drawn the 5-minute zone. Again, this is the 15 minutes area we have drawn inside a 5-minute zone. But from where this 5 minutes is coming? From where this zone is coming? This is not inside the 15-minute zone. This zone is not inside the 15-minute zone. So go to the 5 minutes, you will get clarity. See here, you have a ERC candle as a leg-in, you have a base, you have a rally. This is a 5-minute zone, but this 5-minute zone is not inside 15-minute zone. Strictly speaking, we cannot plan a trade in this zone. If you are planning this trade in this zone directly, that is called aggressive trade. Previously also we discussed aggressive trades. Recently also one of our members asked this question. Even in the Q&A session I explained. In question and answer 3 session, please go through. I have provided answer to this So the question is, can we take trade directly on the 5-minute zone by bypassing 15-minute zone? That means this zone is not inside the 15-minute zone. The answer is no. But some special scenarios, the answer is yes. Then we named it as an aggressive trade. Why it is aggressive? Because we're not following our actual procedure. We have to find 5-minute zone inside 15-minute zone. But this 5 minutes is not inside. But still we are planning to take a trade. That's why it is an aggressive trade. So can we accept such kind of trades? Yes, only in special scenarios. There are very strong price action clues. Then only you have to take a trade. We have a strong price action clue. See here, before this zone, there is a strong order flow here. That's why prices moved. Next time, when prices enter into this order flow area, it should consume all the pending orders in this area and then entering into the 5-minute zone. So by the time your supply would have been weakened and demand, the existing pending orders in this area, the demand is sufficient enough to break the supply, remaining supply. That is what happened today. That's why we named it as an aggressive trade. When you have such kind of strong clues only, you should know before our zone, 5-minute zone, there should be a strong order flow. That order flow should weaken the supply by the time prices reaching into this demand zone. So based on such kind of price action clues only you have to take. That is one clue. The another clue, previously I told you one scenario. What is the scenario? There is another way of drawing demand and supply zones. See here. What is another way you can draw? When you have two leg candles. Let me delete and show you. This is the one I explained twice earlier. You have a rally candle. You have another rally candle. The lower wick of this candle and the higher wick of this candle, between them you draw a zone. There is a demand zone. So there is an order flow here. Most of the time, such kind of zones, they work very well. But this zone is a little above our actual demand zone. But when you find such kind of zones, if you are looking into as per our demand and supply zone theory, when you draw a zone like this, if you go one time frame below, you may find a zone as per our supply demand zone price action theory. This is a different theory. This is also a supply and demand zone theory, but it is a different theory. This theory based on two consecutive leg candles. This is the first leg candle, this is the second leg candle. We are drawing a zone between lower wick of one candle and between the higher wick of another candle. Between the wicks, 2 wicks of these two candles, you are drawing a zone. But if you want to find a zone, as per our demand and supply zone, if you go to one time frame below, mostly you find a zone. So let me go to, currently this is 5 minutes, below one time frame is 1 minute. If you go to 1 minute, see here, in the 1 minute we have seen, we have a rally candle, base candles and a rally candle. That means you have a strong order flow in this area. Below that you have 1 minute level, you have another order flow is there. Below that you have 5 minutes order flow is there. And this 5 minutes is inside the high liquidity zone, 75 minutes high liquidity zone. But not inside 15 minutes. Even then, by breaking the existing order flow in this area, currently earlier there were some rejections. That means there are some hidden orders are here in this area without zones. And below that, there is again a 1 minute zone is there. The existing order flow should be violated. That means it should be consumed, the demand, and the 1 minute demand has to be consumed. After that, prices are entering into this 5 minutes demand. So by the time the supply would have been consumed by all these demands, And this 5 minutes demand zone, which is inside our 75 minutes high liquidity zone, probably having higher strength to break the existing supply. Break means to consume the existing supply. Once the existing supply is completely consumed, see how prices are moving up. That way you have to plan your trade, aggressive trades. Without such kind of clues, you cannot plan aggressive trades. Okay, for here I have seen two clues. The first clue is from here rejections and prices are moving. That is the first indication. Second indication, I have identified a strong 1 minute zone where some order flow is there. Order flow means some pending orders. And below that, my zone is there, which is inside the high liquidity zone. So that is the reason why we planned this aggressive trade. Remember, aggressive trades always you have to plan inside the high liquidity zones only. But before that, there should be a strong price action clues. Without price action clues, you cannot directly take a trade on the 5 minute zone by bypassing the 15-minute zone. Because we have a strong price action clues, this aggressive trade is a successful trade. Previously also we have seen such kind of aggressive trades in our analysis part. So today this is another good example. So those who are not having good knowledge on aggressive trade, this is again another good example for you. And that way, UPL has given 7,995 rupees, close to 8,000 rupees. So which is 5.8% ROI, return on the investment. A little less than our average 6.1%. That is okay. So this is another successful trade. Next one is ICICI GI. This is also another successful short trade today. This is a 75-minute zone. This is a ERC candle, 3 base candles, and actually this is also considered as this is a leg candle, also considered as a base candle by our software. The reason is this is not a valid leg out candle according to our software. And this is the valid leg out candle. So that's why it included everything as part of the zone. And previously it is already tested once. But while testing, again it created a new zone inside this. Even 75 minutes also, if you consider this as a ERC candle, if you consider, actually software consider this as a base candle. Let us assume. If you consider, again you get a drop, base, drop. That way also we can consider LOTL concept. But anyway, inside this 75 minutes, again we identified a fresh 15-minute zone. So let us go to the 15 minutes time frame. See here, you will get clarity. You have a drop candle, you have 2 base candles, again you have a drop candle. This is not a great leg out candle, but this can be considered. One advantage here we are having, why this zone, there are higher chances of executing this zone. The reason is we have a drop, a 15-minute supply zone is there, again a drop. Just before our zone, there is another 15-minute zone. Here there could be a strong order flow. And this order flow should be broken and then prices are entering into this zone. That means by the time the demand will be weakened before reaching to this zone. Now the existing pending orders will push the price from this area. See here, why we are giving preferences. These are all some important clues you need to understand how we are planning our trades. Actually, this session, today's session is a very important because you've been observing some interesting points. You have a drop, base, drop. It's not a great leg out, I agree. But still, this is a considerable one. The reason is, again, we have a drop, base, drop. This drop, base, drop has to be violated before prices are reaching into our actual zone. So inside this, we identified a fresh 5-minute zone. Let me show you the 5-minute zone. Sorry, 5 minutes. Okay. See here you have a rally candle, you have a base candle, and then you have a leg out. This is a 5-minute zone. So that way we have drawn this 5-minute zone. Inside 15 minutes, this is a 15-minute zone. This 15-minute zone is inside the 75 minutes high liquidity zone. And below that there is again a 15-minute zone is here. Of course, inside that we can fine tune to 5-minute zone also. And this has to be violated before prices are entering into this zone. See what happened today. At 9:25 candle, it reached the 5-minute supply zone. See how prices were down. But here we identified a 15-minute zone, so we have to exit. Let me show you 15 minutes time frame. The target. So here we have a small leg candle and a base candle and a rally candle. This is the target. Of course, there are higher chances that this zone will be violated. The reason is it is previously all the orders are consumed in this area. But still you cannot plan your target. Who knows? If prices reach it again, if they go back, look into the 5 minutes. See here, it reached the 5 minutes and the pending orders in this year again, how it pushed. After that again it came down. That is a different story. At one point of time, it will look like prices are moving up. It would have been a green candle, that is bullish candle at some point of time. After that, from here prices came down. Just imagine, after that prices further moved, what would have happened? All our profits would have been gone. That's why you never know what will happen to. So you need to book your profit. Even if you want to go for trailing based stop loss, that also doesn't work. If there is any nearest supply zone, then you can plan. See here, if you really wants to go for trial, you have to wait your prices to reach until this area. So if this is violated, then you will exit from your trade. See, what is the profit margin you get? You get a very less profit. You can't plan your trailing stop loss also for this kind of price structure. There is no other option for you. You have to book your profit, that's it. You can't wait for losing this much margin because you never know what happens to the market. The time it reaches the target, you have to book your profit. That's it, no other option. If there could have been a 15-minute zone just near to this price, then you would have planned your trailing stop loss. You can't give this much profit going for trailing stop loss. So that is the reason why you have to stick and you have to limit yourselves to reaching. It looks like you missed a huge profit margin today. But this is the price happened after reaching your target. See, this is the time. You have to book your profit. You never know how price action is going to be after this. So that is the reason why, even though it looks like there is a huge margin, maybe you would have missed another maybe 10,000 rupees opportunity. This could have been compared to the close of the day, maybe another 10,000 rupees you would have got, or 8,000 rupees. But that is a different story. But anyway, this is going to be our target. We have to stick to the target. So you have to book your when prices reached this area. And that way ICICI GI has given 7,350 rupees profit, which is 5.8% return on the investment. So these are all the stocks from our yesterday's high liquidity zones. Now let us generate demand and supply zones, stocks near demand and supply zones for all the time frames, starting from yearly time frame. Let us find the stocks near yearly demand zone. No stocks are there. Let us find the stocks near yearly supply zones. No stocks are there. And half yearly time frame, let us find the stocks near half yearly demand zone. No stocks are there. For half yearly time frame, let us find the stocks near half yearly supply zone. So only one stock is there. So let's go back. Next, for quarterly time frame, let us find the stocks near quarterly demand zone. No stocks are there. And quarterly time frame, let us find the stocks near quarterly supply zone. So 3 stocks are identified. So let's go back. Next, monthly time frame, let us find the stocks near monthly demand zone. So only one stock is identified. Let's go back. Monthly time frame, let us find the stocks near monthly supply zone. 2 stocks are identified. So let's go back. Next, weekly time frame, let us find the stocks near weekly demand zone. So 5 stocks are identified. Let's go back. For weekly time frame, let us find the stocks near weekly supply zone. So 3 stocks are identified. Let's go back. Next, let us change the time frame to daily. Entry time frame daily. Let us find the stocks near daily demand zone. 10 stocks are identified. Let us check any high liquidity zones are there. So we have Coforge is there, already tested once. Anything else? So only one stock identified, that is Coforge, the high liquidity zone. So let's go back. Entry time frame is daily. Let us find the stocks near daily supply zone. 9 stocks are filtered. Let us identify high liquidity supply zones. Yeah, this is SBI Life, already tested 2 times. So you need to look for a fresh 75-minute zone. That's it. We have identified only one high liquidity supply zone on daily time frame. So daily time frame, one high liquidity demand zone and one high liquidity supply zone we identified. Now let us go back to the next time frame, 125 minutes. Let us find the stocks near 125 minutes demand zone. 4 stocks are identified. So let's go back. 125 minutes time frame. Let us find the stocks near 125 minutes supply zone. 10 stocks are identified. Now let's go back. Let us change the time frame to 75 minutes time frame. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes demand zone. The 7 stocks are filtered. Let us identify any high liquidity demand zones. So we didn't find any high liquidity demand zones on 75 minutes time frame. So let's go back. 75 minutes time frame. Let us find stocks near 75 minutes supply zone. So 13 stocks are filtered. Let us check there are any high liquidity supply zones. This is a high liquidity counter trend trade setup. Bajaj Auto is there. One more, Federal Bank, high liquidity supply zone, a fresh zone. Even Bajaj Auto also a fresh zone. That's it, only 2 stocks. So in 75 minutes time frame, 0 demand zones and 2 supply zones related to high liquidity. we have identified. Total 4, one daily demand zone, one daily supply zone, and two 75-minute supply zones. Okay, let's go back. Let us change the time frame to 25 minutes and let us find the stocks near 25 minutes demand zone. So these 5 stocks are filtered. So let's go back. 25 minutes time frame. Let us find the stocks near 25 minutes supply zone. So these 8 stocks are identified. So let's go back. Next, 15 minutes time frame. Let us find the stocks near 15 minutes demand zone. These 7 stocks are filtered. So let's go back. 15 minutes time frame. Let us find the stocks near 15 minutes supply zone. These 5 stocks are filtered. Let's go back. 5 minutes time frame. Let us find the stocks near 5 minutes demand zone. These 2 stocks are filtered. Let's go back. 5 minutes time frame. Let us find the stocks near 5 minutes supply zone. Total 17 stocks are filtered. So I wish this information is useful to you for your further analysis. Let us all meet again in our next video tomorrow. Thank you.